Yo, what's going on, everyone? Welcome back to another Bitcoin Elliott Wave analysis. In this video, we're going to further discuss Bitcoin's price action on the macro and on the local time frames, and just touch upon our last video update. Again, not many people seem to be interested in these Bitcoin video updates as much as my altcoin updates, but if you would like to change that, please make sure to support the channel by hitting that like button and subscribe to the channel if you haven't already. So that being said, let's do a little housework. We are nearing 2 weeks since our anticipated pullback scenario that we discussed in our prior video. As you can see here, more specifically, we have been narrating this larger diagonal pattern slash scenario. Remember, we discussed on how this diagonal scenario was narrowed down. We approached it with as much evidence-based factors as possible, such as 4 out of the 5 waves was clearly showing great symmetry for the internal wave counts and respecting the A to C, the W to Y Fibonacci extension ratios, and so forth. And it's looking like we are now about 50 to 60% complete with this correction. And this is, whether that's good or bad news to you, I see this as fantastic news from a market psychology standpoint. This is a clear sign that leveraged bear traders are still in control. However, it's not enough control against the spot traders who may still be looking at the overall trend as bullish on the macro, which is the camp that I am currently fitting into. So this is why I am still seeing that no matter how inevitable this wave Y is to the downside, we do have some phenomenal support levels, or at least assumed phenomenal support levels, because we haven't even reached the minimum Fibonacci level. Well, at least we did for the 236 level, but the 38.2% and possibly even down to the 50 or 61.8%, that's still a golden Fibonacci level that we're looking for. The 50% is not a true Fibonacci level, it's just 50% of the overall range from the range low here all the way to the range top. But the 61.8, even at $90,000, is a fantastic opportunity, in my opinion, for Bitcoin to continue its further bull run. So this is great news. Since this correction here, a lot of people seem to be in despair, and that just gives me further confidence and conviction that it's just more of a leveraged market right now. Highly sensitive people are entering the markets with larger leveraged plays, and that's why I think the bears are in control in that regard. However, the spot traders, I think they're not phased as much from this current pullback that we're seeing. We are starting to finally see some distribution levels being created, which gives us further confidence that this is more corrective than impulsive to the downside. So this gives me the implication that these levels here are going to be acting as strong support. And again, it's just going to be a follow-up. We are now further deviating away from this trend line here, so this becomes less relevant. It was more relevant when we were over here. There was a higher chance for it to break above these regions here. However, now that we are now deviating away from those levels, these levels here, this trend line resistance becomes less relevant. So another thing to keep in mind is I think a lot of people are also observing a possible divergence here on the local time frames. You can see that there is some kind of established bullish divergences. However, these are not real true divergences that you want to be kind of witnessing, as we are still in the neutral zone above the 30-point level. Usually you want to see divergences happening in the oversold territories before a true reversal actually happens. Whether that's going to be between the waves 3 and 5 in a C wave, or if some kind of impulse was forming, we can at least get some signals on where a possible reversal or a true reversal with high probability will occur. So since this camp or department is not really being fulfilled, this is something that we can observe at a later date. But for now, if this divergence does hold, there is a possibility for this X wave to actually come into play, where we label this X wave as further distribution before we go down. And that kind of fits into the scenario where we also have that on the macro time frame. We discussed the larger macro time frame, and if we go back to the overall distribution, we talked about the timing regard of how these wave 1-2s are playing out. Again, it's not uncommon to have sharp wave 1-2s, especially on the minor degrees. It's just a little bit more relevant in terms of a timing perspective if we actually do get a higher X wave. So I am also in the camp where we might further distribute a little bit longer here for this X wave. In fact, it'd be great from a timing perspective as well for this September or downtember. This move here to the downside can also coincide with what we also discussed as another evidence-based approach factor, which was that September is usually a downfall. And you can see this concluding here around the 38.2% could align with the September area, end of September, that is, approaching October, which gives us a further confidence that October is usually the month of a continued bull run. February and month of October is usually the strongest months of any year. Usually, the highest probability for October to be a bullish run is actually very, very high. So what happens in between now, in between October, it's still on the tables whether we get that pullback quicker or we get at a little bit of a later stage with X wave, with a higher X wave, that is, and then a pullback that could coincide with that theory in mind as well. And what's very interesting is that it's also very important is the 200 moving average here, ladies and gentlemen. The 200 moving average has always acted as a magnet for a support level, and then further distribution before we get out of here. And you can see within bull runs, the 200 moving average on the daily time frame is acting as either support on a bull run or a bear run if it acts as resistance. So you can see here the 200 moving average is definitely going to be acting as support. Whether we get market manipulation at those levels or not, it's really up to how the markets are going to be playing out. We just simply do not know. But the 38.2, very interesting, is aligning with that 200 moving average. So something to keep in mind for that for sure. But again, we are definitely looking like we are working for this wave Y eventually. So just one more round of pain, ladies and gentlemen. We have already done most of the pain. We just need that partner leg, and that will give us the further conviction that we are working for much higher levels. I really do think that we are going to be working for an extended bull run, and this would be the first of many bull runs that we actually continue this bull run, further deviating away from the cycle theory that we also have been discussing. And it's also aligning with my market psychology perspective. It doesn't really even have to be an extended bull run. It's just how you see it from a timing perspective more than anything else. And on the weekly chart, we talked about why we're an extended fifth wave, because a lot of people missed out on this wave 3. We were way ahead of schedule. So you can see we are already kind of deviating away from the traditional timeline approach on how these waves 3, 4, 5s usually play out. We got this wave 3 quite early. So in order to make up for this slope that we are missing that happens post halving cycles, is usually this is pretty much the only way we can see it, which is an extended fifth wave in the minor degree in the white. So I do think that we are missing some kind of missing parabolic slope here. So you can see from a bottom-up, top-down perspective, everything is aligning quite nicely, ladies and gentlemen. So I think that we are very, very close to actually continuing this bull run, in my opinion. So let's not be two-faced from this current pullback. If you've made it this far, fantastic. I'm sorry I had to give the unfortunate news of a potential pullback, but it is what it is. I mean, we've been calling for this pullback for quite some time. It's been about 3 weeks or so since our last update. And in the midst of all this bullish chaos, I had to just show what the real evidence was, which is this diagonal scenario, and that we narrowed it down as best as possible. And I think a lot of even Elliotticians were calling this as the lowest probability, and they don't like the size of this diagonal, but we had all the possible evidence from this, especially from the Fibonacci ratio extensions of the internal counts. So it's really boiled down to two scenarios here on the local timeframes, ladies and gentlemen. X wave could be complete, and we're working in an A, B, C to the downside to complete this wave Y, or wave X could be placed here where we're creating a flat here. We do have a three-wave structure here, so that further completes on furthering evidence on how this flat could be playing out. We can, really work for a sharp correction to the upside. I think people are talking about even a possible gap being there. And then we have another resistance here at the 200 moving average on even the shorter time frames of this 4-hour time frame here. So yeah, two basic scenarios here on this the local time frames here, but the overall implications of a wave Y still on the table. Very high probability, I would say 90% conviction at this point, that we're working for one more leg to the downside, and then we move up. But then great news on the Bitcoin dominance side. The Bitcoin dominance is still truly in a bullish continuation, or shall I say bearish continuation, that puts altcoins in a bullish position from an overall general crypto market perspective. So hopefully that was helpful. We will update this as much as we can going forward. That's if we show more interest within these Bitcoin video updates. So please make sure to hit that like button, subscribe to the channel. But I do give more updates within my members only updates, which is in Patreon, 2 updates a week, and then Discord is more bi-daily, more on a daily basis. So if you're interested in in joining those. The links are in the description below. But most importantly, please, again, once again, for the third time, subscribe to the channel, like the video if you are interested in more of these Bitcoin updates. I will be more than glad to do more updates for these Bitcoin video updates. But until then, we have to focus on what you guys are most interested in, which seems like it's altcoins. Thank you very much. I'll see you guys in the next video. Have a fantastic rest of the week and happy Labor Day. Bye-bye.